Hello, trading has closed on the 30th of April 2024. We always begin with our disclaimer. We'll go over our calls. We'll make some predictions. It's my trading plan for May 1st. Please remember, my calls can be wrong. Trade at your own risk. It's wise to familiar yourself with the rules of my system. That's a summary. The rules are described in detail here. Okay, well, let's go over what we said. We said we had resistance at yesterday's high. We said if we were to continue rallying without interruption, we'd have to gap over that high. Otherwise, we'd see lower prices, which turned out to be an understatement. This is just a reminder of what we said. It worked. Tomorrow's May 1st. We're within the window for one of Carol Ann's change in trend dates. Now again, just because there's a date, it doesn't mean you're going to have a change in trend. It's just if there isn't a date, you probably aren't going to have a change in trend. And there's a 3-day window. So we're not going to trade based on that. We're just going to say if other things can mark this as a low, we would like some confirmation, which this is. Well, during the day, MEJT marked this as a false move. That certainly worked. This is what I call a wall into the close. Let's go over what happened. You're in a strongly down day, 10 minutes left to trade. You're trading over all intraday lows. So the last 3 hours of the day accomplished nothing. It's a sign of churning at the low, if that's a low. Then, with no news I'm aware of, we have a complete collapse, what I call a wall into the close. This is not the way professional money managers sell. They're going to sell when there's liquidity. And what happens here is, more often than not, I won't claim it works every time, more often than not, retail customers are saying sell at any price. Specialists are compelled to take the other side of the trade, and it just drops with abandon. It means it's kind of a sentiment indicators that the amateurs have given up. Now, when the professionals were forced to go long into this decline, usually they're going to get their money back fast and a lot more. And by getting it back fast, I mean gapping over this high. That's if this is a panic sell. If it's the real thing, we're just going to keep on dropping. And that we're not going to know until tomorrow. Certainly futures are down. And if we just keep on dropping, I can explain it because I don't think the correction's over. But if this is panic selling, even though futures are down, we're going to gap and promptly overtake this high. And if that happens, there could be a strong rally. That we're not going to know until the open, and we're not going to risk any money until we see this reversal, which happens more often than not. If there is a reversal, you're going to have to find some way to explain it. We are close to the 50-25-74 target. We hit its equivalent in futures, but that doesn't count. There was support under that number, but it doesn't count as being satisfied till it prints in regular trading hours. And if we just keep on dropping, that could happen. I mean, this certainly isn't a very healthy pattern. I don't think it's over. This could be an A, this could be a B, we could have a C straight down. But let's see if we can count it. Well, this certainly has the look of the right count. The only problem is that A and C in this count don't have a good fib relationship. Now, that doesn't make the count wrong, but usually I can find something, and if we just keep on dropping, that's probably the count. We've dropped in a straight line to this trend line, My rule for straight drops into trend line is you gap under the line or the line wins. That means if we're going to keep dropping, we really should gap under this line. And if we do, I can see us going much lower, and futures are already down. So one possibility is we keep dropping. But what if we stop here? Certainly, if that's the right count, I can't count this as being over. But again, it's not the only count. Well, first let's notice that the last few days we have an A, B, C, and C is equal to A. Here's your A, here's your B. C is exactly equal to A. So what if that's red C and that's red B? Well, if you take red A from the high, and you measure from the start of red C to the end of red C, it's 38.2%. It's absolutely perfect. And not only that, we can look at the fibs of wave red A, they work. And you look at the fibs of wave red B, you got your ABC with A equals C. You have your ABC for B with C as a half of A. And your ABC, C is equal to A. That C is twice this A. I mean, everything works perfectly the way you want it to work. I admit it looks kind of forced. I'm not going to guarantee it's the right count. But it doesn't break any rules. If that is a false move, this count explains it. And if that's the right count, which we don't know yet, we're going to probably gap, overtake this high, and have a strong rally. I'm not going to risk any money on this until I see that happen. But if we gap up and take this out, I'd be tempted to believe it because that's a valid count and we're near Carolan's change in trend times, and I don't trust these walls into the close, particularly when they stop right at the trend line we showed. More often than not, that's a false move, and if we gap over it, I think it could be a party to the upside. We haven't gapped over it yet. Don't forget, if we keep dropping, it's a long way down. Well, Wednesday's pattern has a really high regardless of where we open. The FOMC report comes out 2 o'clock Eastern. It usually leads to wild move, which I can't predict with a sufficient degree of accuracy. I want to stress, I usually don't risk much, if any, of my money on those days. And I know a lot of people live for those days, and they make a lot of money on those days, and they're just more nimble traders than I am. I just look not only at the reward, but also at the risk. And when prices move that fast, as they usually will, I just can't keep up with it. I'm kind of an old guy. So I don't mind if I miss a winner. I just don't like taking losers, and I might not risk any of my own money on what I'm going to say. So with that caveat that I might not be risking any money of my own, the wall into the close is highly suspicious, and like most walls might be a false move representing panic selling. It came too late to represent trades made by big money. In addition, we had a straight line drop into a significant trend line. The futures are down quite a bit as I write this, so it's entirely possible the decline continues. All we need to do is to gap under Tuesday's low. That's all bears need to do to keep the decline alive, and that's possible. However, if we don't gap under that trend line, any decline's unlikely to stick, and furthermore, improbable as it may seem with futures down so much, there's a decent chance we invalidate the late drop by gapping and promptly overtaking its high. And if, in capitals, if that happens, we could have a very strong rally. And once again, I might not play it because of FOMC. But I certainly wouldn't stay short overnight into this, and if I miss a move, I miss it. I don't really care. We have the pattern with the early high, and even though we're down, we open up here, we could have completed an ABC down, have a sizable move up. That's today's call.